Good evening. I'm Dan Fitzpatrick here at StockMarketMentor.com, and it is Monday, December 21st. I want to look at CarMax today. First of all, we'll get into the last couple days pretty quick here. But you can see this has been a real, it's been actually a fairly orderly move in this stock, where you see a good strong uptrend over, this is a weekly chart, so over a lot of months, and then sideways consolidation, and then another move higher. The difference, of course, is that the stock isn't consolidating now. It's actually cut right through the 200-day or 40-week moving average and is now trending lower. Well, the big volume spike here is pretty ominous. Okay, so you look at this and you can see how the stock traded down big on Friday when they reported earnings and missed on revenues. So when a stock that is supposed to be a growth stock reports revenues that are less than expected, that's a big deal. Okay, so I'm looking at this, and this could be a climax low here. This is known as a Dragonfly doji that tends to occur, or when it occurs, within a steep decline. And I would say, this is a fairly steep decline, 30%. When it occurs within a steep decline, can indicate a reversal where the stock gaps down, trades down really low, and then moves higher and closes near the high. This can kind of suck you in because you're anticipating this kind of move higher. Well, we didn't get that today, and the reason is because Goldman Sachs, I believe it was Goldman Sachs, no, it was actually RBC Capital. They maintained their rating, but they cut their price target from 65 to 58. So the stock gaps down again today, trades on pretty decent volume, not Friday's volume, but a pretty solid volume relative to the average. But it also closes up near, at least in the top half of the intraday range. So I'm looking at this. And I'm not a guy who, I'm not a bottom fisher. I don't like to try to get that stuff because it tends to have kind of a tougher climb on the way up because there's a lot of people that are wrong about the stock. And they want to sell into any rally. But if you're looking for that type of trade, this is your opportunity right here with a stop a little bit below 50 bucks. Though frankly, you could put a stop below 50.57, which was Friday's intraday low. The whole idea is that this Friday was an actual capitulation, and that's the last of it. And then maybe even RBC will be right, and the stock will come up to 58 bucks. So you can buy this right now with a stop just a little bit below Friday's intraday low. Or you can have an even higher probability trade, though it's a little more risk, if you wait for the stock to surpass Friday's intraday high, which was 53.90. Because you think about it, if you're buying the stock now, yes, you know what your defined risk is, but really you're only up 2.7% before the stock tests this high. So you can go ahead and forego that profit by waiting until the stock does surpass the high, and then you've got quite a bit more room for the stock to climb. Or, my personal favorite, you can split the difference. You can take some now and then add to that position if the stock does move above Friday's intraday high. Okay, that's it for this video, members. Over to the strategy session.